Value added tax. Although we're used to the term now, about this time last year, we weren't as comfortable with the word and were certainly not happy with its introduction. So what exactly is VAT? So VAT is a tax on the consumption or use of goods and services levied at each point of sale. So it basically is a form of indirect tax and is used in more than 180 countries around the world. So the end user, which is you and I, ultimately bears the cost. And businesses collect and account for the tax on behalf of the government. So this time it was introduced on the 1st of January 2018 at a rate of 5%, which by the way is much lower than most countries across the world, to provide the UAE with a new source of income that could in turn be utilized to provide high quality services. Right, so now let me explain to you how it actually works. Example, a farmer grows dates and sells it to a processing factory. Farmer collects VAT. Factory processes the date syrup and sells it to retail chains. Factory collects VAT refund paid to the farmer. Retailer sells it to customers. Now the retailer collects VAT refund. Now basically what happens in the entire process is VAT registered businesses must report the amount of VAT they have charged and the amount of VAT they have paid to the government on a regular basis. So the difference is basically what is going to be accounted for. If they have charged more VAT than they have actually paid, they have to pay difference to the government. If they have paid more VAT than they have actually charged, then they can reclaim the difference. So what were the major implications of VAT? General cost of living went up. And of course, depending on your lifestyle. So businesses had to document their income, costs, and associated VAT charges through an online process. Just in the first year, a total of 296,000 businesses have registered with the VAT system. 176 tax agents were accredited, 650,000 tax returns were received from businesses registered for VAT purposes, and 453,500 queries were answered by the FTA. Fun fact, Federal Tax Authority was also among the 8 most searched names in UAE on Google. But there were also some changes that were introduced to VAT during the course of the last year. It was announced in October last year that tourists were allowed to request refund on VAT effective from November 2018. So VAT was only implemented in Saudi Arabia and the UAE last year. So Bahrain rolled out VAT on January 1 this year. We don't know what's going to happen to the next countries. Now you may ask why VAT and how exactly will it help the region? Brace yourself for some interesting numbers coming up. A GCC-wide VAT could generate revenues of between 1.5% and 3% of the total non-oil gross domestic product from next year. GDP growth in the GCC is expected to reach 3% this year. The introduction of VAT in the UAE could raise up to 1.7% of the country's GDP. So basically what I'm trying to say here is VAT has proved to be a new source of income to the country and will help the government reduce its dependence on oil as a source of revenue.